Welcome back to Kapeleris Talk TV. I'd like to introduce my next guest, mortgage broker Roy Cocciollo from Your Mortgage, Your Way. Hi, Roy.
Hi, Carmela. How are you?
Good. How are you?
Awesome. Thank you very much for having us here today.
Thank you. Let's start off by talking about the power of prepayment privileges. There's a lot of deciding factors that go into prepaying your mortgage. What are some tips that you can share with our viewers about that?
Well, the first thing is people don't realize that they actually have an advantage of prepaying their mortgage. So most, depending on the lending company that you use, it could be anywhere between 10% and 20% per year as a lump sum, plus you can increase your payments. And nowadays with this market, with this crazy prices going up, and if you're looking in the future to actually buy up, say for example from a condo to a house, it's important to have as much equity as possible into your mortgage or into your property you have today. So even a little bit does help.
Right.
And most people don't take advantage of that. Pay every 2 weeks if you can. Try to round up your payment to the nearest 100. So if it's $1,250, try making it $1,300. And also try, at the end of the year, try to put a lump sum of maybe even 1% of your mortgage amount, which will allow you to compound that and pay off your mortgage faster and give you more options in the future, whether you want to refinance to put in a swimming pool, for example, or if you want to buy upwards into a larger home because you have a growing family. So it's important to do that.
Yeah, I recommend that to all of my buyers and sellers, and I do that myself. Prepayment is really important. Is it available to all homeowners and on all mortgages?
Basically, most of them will allow you. It just depends on when. Some only allow you on the anniversary date. Some will allow you on any prepayment, any payment date, so you can prepay up to the maximum on the prepayment date. And you don't have to do it all at once. If you have $1,000 this month, you can put in a lump sum. You can do that, and on your next payment date, you can put a little bit more. So always try to put something aside. It's for saving. It's money that you save that you can't really get to. So it allows you to build your net worth a lot faster.
So when people are looking or searching for a mortgage, is it more important to look at the terms and conditions versus the mortgage rate in some cases?
Absolutely. Not in some cases, but all cases. Because if you have a mortgage that's, say, 5 basis points higher, that could cost you maybe another $8 or $9 a month, where the penalty programs at the end can cost you tens of thousands of dollars. So make sure you ask the question, how they calculate the payment, their penalties, and what are my prepayments. So it's not always about rate, but actually product and flexibility, which is really important.
Yeah, that's really important. And what's the difference between a bank and a mortgage broker?
Well, banks have one. If you go to TD or Canada or CIBC, they have only one product. Dealing with a mortgage broker, we have access to 50, 60 different lenders, including the big banks, where we allow you to understand all the options and all the penalty calculators, so you can see what actually will cost you the least amount, rather than just giving you the one product the bank decides what they're going to give you.
Yeah, that's very important. Let's talk about saving money for a down payment on a home. The earlier you start, the better, correct?
Absolutely.
What are some practical tips that you can help our viewers to help them save money? Okay,
so first of all, if you're living at home and you're looking to buy a house, look at what you want to look at spending every month on purchasing a home, whether it's $1,500 or $2,000 a month, and take that money and put it aside in a different bank account, somewhere you can't easily access it, and see if you can save that money. And if you can save that money, number one, it shows you can actually make monthly mortgage payments without affecting your lifestyle. Two, it allow you to compound the savings you're already putting in place in order for you to buy a house in the future. If you're renting, for example, and it's $1,500 a month, and you know that buying is going to take you up a little bit higher to $2,000 or $2,500, try to save that extra $1,000 a month, again, in a separate bank account. So it allows you to feel the pride of home ownership and whether or not you can do it, so you're not going into buying a house and then finding out you really can't afford it.
Sometimes with young people, I suggest that they rent first, see if they can maintain $1,500 a month and then some, and then start saving for a down payment.
Yes, or if they're living at home with parents, it's a great way to save money.
Yes.
Put that money aside. If you know it's going to be $2,000 a month, put it away. You know at the end of the year you're going to have between $24,000 and $30,000 saved, plus some other savings. Then you have your 5% down to buy something. Yeah,
go back and live with your parents and rent the condo or whatever for $1,500, and that way you can test and see what you can afford. But it's very hard for first-time buyers to afford a home these days.
Well, what happens is we are in the lap of luxury. Everyone wants everything today. They want nice cars, they want good clothes, they want to travel. These are all things that people think that they want. But you have to really plan to buy a house. It's not like the old days where...
the entitlement generation.
Yeah, entitlement generation. And also what happens is, you know, we're so used to having everything today, whether we have credit cards, no one saves for anything. So it's really important that if you are serious about buying a house, you have to plan for it. You
Right.
got to really put down, like any type of goal you have or any
have to
business plan.
budget.
You have to budget saying, okay, I want to live in a house that's going to cost me $4,000 a month, including taxes, all my expenses. Save that $4,000 a month. So if you can't go on vacation, don't go. If you have to buy a Volkswagen instead of a BMW, do so.
Cut back a bit.
But learn how to actually live within your means, so that way you can invest for the future. We all want everything today, but really we live for tomorrow.
Right, exactly.
So that's
That's
important.
well said.
Thank you.
Is the government making changes to the down payment rule?
Well, they have changed it this year already. Beforehand, you could buy up to 5% down, up to $1 million.
Right.
Now they've changed that rule. Now it's basically 5% of the first 500,000. Anything above the 500,000, you have to put 10% down. So,
Okay.
for example, if you're buying at $600,000, you can put $25,000 down in the first 500, and now that extra 100, you have to put $10,000 down. So now your down payment's gonna be $35,000. So really, it's about 6.8% of your purchase price. So again, if you're buying at the $1 million mark, you have to put 5%, which is $25,000 on the first $500,000, and then $25,000 on the other. So you put about 7.5% down.
Okay. So do you think that this was done to slow down the real estate market?
Well, I think they're trying to slow down the real estate market. The only problem you're running into, the only way you can curb demand is to increase supply. And unfortunately, there is a housing shortage in Toronto and the GTA in general.
Right.
And now even if you're going to the outskirts, you're getting multiple offers in Brampton, in Hamilton, in Brantford. All these places that were like slower markets are now starting to pick up because people can't afford to live in the GTA.
Yes.
And they get frustrated because when you go in, everything's a multiple offer. So you go in multiple offers, you have to go in with no conditions.
Right, exactly.
You have to make sure you have everything put in properly. And a lot of people are buying these places cash. A lot of
Yes.
foreign investors are coming in and just buying it up.
Buying cash.
That's
So what advice can you give to, people out there that are in the first-time buyer range or second-time buyer range, and every time they go make an offer, there are multiple offers, and they are sometimes forced not only to better their offer by the sum of money, but taking out the conditions.
Yes.
So they need to go, like you said, with no condition on home inspection or financing. Now, in terms of home inspection, how can you help them prepare so that they're in a more winning situation for the house?
Well, I think first of all, if a person, usually nowadays, vendors already have a preset home inspection they can take a look at.
Right.
Second of all, have a mortgage consultation. Do not go and get pre-approved with the bank. They do not do a very good job in making you understand what your actual options are. So work with a mortgage professional that's going to, number one, anytime you see a property they like, you can send a listing to. Have them work all the numbers out to make sure you can qualify it easily with no problems, and that you can go in with a firm offer. So it's really important that you work with somebody who's going to sit down with you for about an hour, go over every situation that you have, go over your income, your debt servicing, make sure they understand what products they're available for,
Right.
any other programs that sometimes government programs out there to help first-time home buyers. So
Right.
it's really important that they get all that information and get really pre-approved, pre-qualified, rock solid. There's no surprises. We have your income for 2 years, we have your credit rating, we have everything, making sure you have enough down payment. If debts have to be paid out or if your credit's a little bruised, we can fix all that
Right.
and give you time to purchase something and go in with confidence that when you put your best foot forward, you will win that.
Right. So get your pre-approval, and sometimes, Roy, they do have to get a pre-approval within like 800 to 850 because you don't know where you're going to go with that. So I guess you can put a maximum on it or cap it, but they
Exactly.
sometimes need to have that flexibility open to them.
Well, if you're having a large down payment, 25 or 30%, you have a little bit of wiggle room there. But especially people coming in with 5 or 10% down, the ratios are very, very tight because you can only go a 25-year AM. Where if you put more than 20%, you can extend the 35-year AM. That gives you a bigger buying power. So that's why if you're putting that less than 20% down, you really have to sit down with somebody who's going to hold your hand
Right.
and make sure you understand. So that way, when you're ready, and Carmela, you give us a call and say, look, my client's looking at this property. You send us the listing. We work all the numbers out, make sure the taxes fit in line. If there's
Yes.
condo fees, the condo fees fit. So we make sure that all happens. So that way, your client can just basically focus on getting the home that they want.